Well, this week the script has flipped. US markets have looked relatively unsteady, but the Australian market has looked quite strong. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It's already the 17th of February 2026, and before I start, you do need to be aware that whatever I say is general advice only. I guess a lot of the concerns about the recent weakness in the US market come from worries around AI. Now I think that these worries are twofold. There's a lot of existing companies, particularly software providers, and it looks like their business model is going to be able to be replicated with AI, usually at a fraction of a cost. So there's a lot of software companies in the US that are seen selling a lot of things like consultancies, financial advisors, tax planners, all sorts of traditional businesses, whose basic way of performing business could very easily be disrupted by AI. We've seen it a bit here as well on the Australian market. We've seen selling in companies like Xero, that does accounting software, companies like WiseTech, that does logistics software, companies like Aristocrat Leisure, that does apps and games and things like that, digital games. So yeah, a lot of companies out there are potentially seeing selling, because investors are worried that AI could come in, anyone really with AI could come in, maybe vibe code a little app and completely put them out of business. So that's the first worry around AI. The second worry is actually completely on the other end of things, and that is that a lot of these big AI companies have spent a ton of money. They've built all this infrastructure, but that infrastructure, it's not going to last very long. The useful life of a lot of these products is just a couple of years. And so they've spent all this money, trillions of dollars in fact, but they're not really achieving earnings from all that money that they've spent. They're not getting huge revenue growth out of it. They're not getting huge earnings growth out of it. And they're planning to spend a ton more money. So at the other end of things, the market's also worried about a lot of these companies that have spent a bucket load of money and really aren't generating additional strong earnings because of it. So really at two ends of the spectrum, but we've seen selling in both ends of the spectrum. We saw a bad report from Microsoft. They dropped strongly. Like I said, a lot of software providers at present are seeing strong selling. So both ends of the spectrum, and that has unsteadied US markets a little bit. We've seen outsized selling in US technology for the past couple of weeks, and probably the main reason why US markets are no longer looking as strong as they did around the start of the year. For the Australian market though, we're actually in a company earnings reporting season, and so far I'd say it's been quite good. We saw our biggest listed company, CBA, report better than expected results. It was up 6% I think roughly on the day. It continued higher after that, dragged the whole financial sector up with it. And then today we saw our second biggest company, which is BHP, also report better than expected results. I think it finished about 4 to 5% higher. So far, a lot of the big reporting companies have achieved pretty good numbers, and they've jumped fairly strongly on the back of it. So that's really quite a positive sign, and I think it's the big reason why the Australian market currently looks a bit more positive than the US market, and we'll look at the charts in a second. Because otherwise, not a whole lot to be excited about for Australia. Now, again, I'll touch on that in a minute. There have been some bad earnings reports though, and I want to call out CSL for a pretty terrible report. Fell quite strongly on the day, stabilized a bit afterwards. I would suggest that if their name wasn't CSL, they would have fallen much more strongly than they did. Really terrible numbers, poorly operated, terrible Vifor acquisition, incredibly overpriced acquisition that they made, and I think they killed off a lot of their divisions over the last sort of couple of decades to focus on the blood products, and then they've made this acquisition. I don't think they were the right moves. I guess with the benefit of hindsight, they weren't. Like I said, probably should have fallen further, and just the blue chip nature of the CSL name, I think, holding them up. But yeah, look, plenty of reporting going on. We are seeing large moves on just about every reporting stock so far. Big ups, big downs, and there have been some good results, and we've seen some good movements based on it. Like I said, the big reports out of CBA and BHP helping to keep our market strong. Because otherwise, I think our market would be a little bit more negative. We saw an RBA rate rise recently, and today we saw the release of the meeting minutes from that meeting where they lifted rates. Looking through these meeting minutes, and to be honest, the RBA seems quite hawkish. They basically said that inflation was stronger than expected in the last couple of quarters, both headline and underlying, that the jobs market's been quite resilient, and that they don't think that the current monetary stance is restrictive. They don't view the current interest rate level as restrictive. So with inflation above target and basically stronger than expected, and jobs numbers coming in better than expected, and the RBA not seeing current interest rate levels as restrictive, that basically says there's quite a reasonable chance of further rate rises. We will get a big sort of update on the probabilities of those rate rises later in the week with the unemployment numbers on Thursday. They are expected to show a slight tick up in unemployment, and if that is the case, maybe that'll moderate some of the bets on further rate rises. But even so, it does look like we could see at least one more rate rise in the coming months, and possibly we might go a bit further. These things do tend to trend consistently in one direction for a while. So like I said, the RBA probably a bit more hawkish than expected in the meeting minutes today. And we'll be watching that unemployment release on Thursday morning, 11:30 Australian Eastern Daylight Savings Time. Really strong jobs numbers will be great, but it'll also possibly increase the likelihood of another rate rise. It does put us a little bit at odds with the US because they're pricing in probably more rate cuts. In fact, we saw US inflation late last week, came in lower than expected, and that does increase the likelihood of another Fed rate cut in the coming months. I think April is now the odds-on favorite for the next Fed rate cut. Interestingly enough, we did see that lower than expected inflation number, and US shares did push up initially, but they came right back off, and they closed fairly flat. So we'll actually have a quick look at the charts and see what I mean by that. And this is the US S&P 500. They did initially push up after the inflation data on Friday, but they came back to flat. And they were closed overnight for the President's Day holiday, but currently their futures are a little bit lower. For me, they're technically trading in a bit of a channel now. They were in an uptrend with the higher peaks and troughs, but now we've seen 3 inline peaks and we've seen 3 inline troughs. So now we're looking a bit more sideways, a bit more of a channel pattern. If they are able to push up from here, we're looking at a move towards the all-time high at 7,000 index points. But if they do break the support level here at 6,800, then now going to be looking a bit more bearish because that'll mean a lower trough. Lower trough could lead to a lower peak, and that could lead to an eventual downtrend. So it is quite interesting that even with that, positive sounding inflation data on Friday, they weren't able to show a signal of a move back towards the all-time high. For the Australian market, and this is the X-share, the Australian top 200 share index, and we can see that we also have been trading in an uptrend, but our uptrend is still holding. You can trace this uptrend back to April, May last year. We did have a more steep uptrend initially, and it's shallowed out a bit now. But regardless, we bounced off the trend line, bounced off the moving averages. We took a big jump up towards the all-time high at 9,100. We failed at that level, and then we've come back to the previous resistance, which we've tested as support. And we're just holding on to that level at the moment. If we do get bearish leads from the US, perhaps with a break of their 6,800 level to the downside, that would indicate a move back towards the trend line for me. If they bounce from their support level tonight though and show a bullish signal towards their own all-time high, indicating a move towards 7,000 on the S&P, to me that means we'll likely also attempt another run at 9,100 on the XJO. So for me, for once, it's the Australian market perhaps looking a bit more steady, a little bit more positive, and the US market looking a little bit more wobbly. It's a bit, out of the ordinary, but it does come after some pretty good reports from CBA and BHP and a few other names in the Australian top 20 share index. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you next time.